All right, guys. So I have to talk about the debt problem that's going on in a lot of clients' homes throughout America, right? Their budgets are under a lot of stress. And if we can go in with a loan program that wrapped up their debts and lowers their payments, use mortgage interest in some states that may qualify it as tax deductions, hey, we're talking less taxes, lower rates, lower payments, help people get out of debt faster. What not to like about that, right? So as you can see, credit card and auto loans have more than doubled in the last 20 years. And my question to you is, for those of you watching, do you feel the weight of that red bar for wherever it is for you on that screen? Do you see this $5 trillion in consumer debt, right? Every time a person is paying a 22% interest rate on a credit card, they're effectively subsidizing the bank's profit while draining their own retirement funds. Does it make sense to be paying 20+% on a credit card when they could be paying a fraction of that through their home equity, right? So we're just going to give you a little bit of an example of how we see it on our side and how we help our clients. Some people got Target cards, Macy's cards, Chase Disney. We got a first mortgage with Citibank. We got a Bank of America card, a timeshare. Oh, that's always fun, right? Is your monthly budget leaking nearly $4,000 a month just to keep your head above the water, though? This is a real world scenario, and this family is literally paying more than to their creditors than they are to the roof over their heads. This is a mission impossible budget. So let me give you a little bit of their situation when we looked at this 34-year-old clients. Their home was valued at over 420,000, but they would only be able to borrow up to 80% of their home's value. And each month, including all their debts, they were paying $3,633 a month. Majority paid not to their home, right? We were able to get them a loan of 328,000, a 30-year loan. This was a unique product. This was with a specific interest rate of 5.5. That was this particular product, right? And what we did was we wrapped up all their debt, which to me is pretty cool. I don't know about you guys, right? Where instead of that 363,633, they were paying now.
$1,862 a month.
Okay, so in that we were able to take a portion of that savings and put 800 towards accelerating their debt almost 16 years faster. And well, what would you do with an extra $971 a month, right? For them, because there was a life insurance need in the home, we were able to cover both the husband and the wife with $500,000 each, which came out to $125, right? Again, this is a young couple, so the younger you are, lower your insurance premium would be, right? But by consolidating that toxic debt into a new mortgage, we dropped the total monthly outgo from 36 nine, not 33,
1862.
because that's what most lenders do. Here's where we start to pivot, right? So what if I told you that by lowering your debt, we could actually make you a multimillionaire? That'd be interesting to anybody to see that?
Yeah.
Okay. So in the 16 years later, after we met with them, they're now 50 years old. They have a paid off home, right? And then because there was again that life insurance need, we gave them over $500,000 each. The leftover money, the 846, we put that into an investment at a steady 9%. And it grew over that 16-year period to over 361,000. So they had extra money they were using to pay their debts and their loan amount. They could then take that money minus the life insurance, they could invest that towards what? Their retirement, right? So would you rather have a paid off car today, or would you rather have $2.7 million in the bank, right? Would you rather also be mortgage free at 65 with that 2.7 in the bank too? Well, this is the power of our crusade, and we take that again at $971 that we found, and we action of the family in the form of life insurance, right? 846 of that went into an investment account. Again, because we accelerated the plan, the house paid off 16 years earlier. Age 65, they were sitting on 2.7 million. That's a pretty nice nest egg. Here's my next question. Is your current creditors and bank showing you a path to the $2.7 million? Or are they just happy taking your monthly check? Right? That's the difference between a loan, a mortgage loan, and what we do for our clients, which really there's no name for it. The best way to describe it is that we align our clients' financial goals because we're multiply licensed. All right. We take a very holistic approach. So here's the question that most people are asking me, since I'm talking to them about second mortgages and like eliminating that toxic debt that we saw, right? People, when I'm talking to them, are asking me one very similar common question, right? And if I'm a mortgage broker calling you, first question out of your mouth is probably going to be, what's the rate going to be, right? So now let's since Miss Tracy, you got your mic off, let's go ahead and use you in this playing scenario, okay? Let's I want you to pretend that you are a home buyer or homeowner and you got your loan several years ago, and let's say that you had a 2.5% interest rate, right? So if I call you and I'm talking to you about refinancing your home, and you ask me, hey, what's the interest rate? And I tell you it's 12%. What are you gonna do more or less?
Thank you very much. Don't call me
I'm
out.
gonna like say nah.
Okay,
To refinance it at the new interest rate, that's gonna be 12% is what you're saying?
right. Like if I
No.
said that the new interest rate would be 12%, right? Would you be happy with 12% when you had a 2.5% mortgage? Here's what I do, right? I number one, I want you to think not about the interest rate that you have with your first loan. I want you
Mm-hmm.
to think about all the other debt that you're dealing with, right?
Okay.
Now, let me give you an idea of what I mean by that. First mortgages right now are somewhere in the range of below 6%, right? 6 to 8%, depending on the person's credit score and a few other factors. Okay. Now, like if we're comparing 2.5% to 5 6% and higher, is that really a good interest rate for you?
Yeah, because now that you have me thinking outside the box, that it's not only that 2% was only towards the mortgage. It didn't take into consideration all of my other debt and all of those other interest rates. But now, if I'm going to refinance it, even though it's at the new interest rates, everything else is now consolidated. All the other debts are consolidated. So I'm not just focusing on paying the debt, but I'm also accumulating some wealth. Did I
Right.
say that
And that,
right?
you said it perfectly because it's what you feel is your situation, right? So
Okay.
I'm always taking into consideration again a very holistic approach. We're not just looking at one thing; we're comparing apples to apples, not just apples to oranges. Okay, because like again, if you've got credit cards, Mitch Tracy, and those credit cards, well, if you went out, what's your favorite credit card to use?
Louisa just said something.
Oh,
Oh,
I did?
okay,
Well,
yeah,
I
you're
thought you did.
American Express.
American. Let's say that Miss Tracy's using American Express, right? It would. Do you happen to know what your interest rate is on that American Express card is? Do you see it on your digital statement if you open up
If
your app?
if I open it, yeah.
If Would you be surprised if I told you that you're not going to find the interest rate on the app itself?
On this, um,
You'll see it on the paper statement, but you
right.
won't see it on the digital app itself. And part of the
And
reason,
even there, it's hidden. It's on the back of the second page.
and yes, and even then, it's still hitting. Which but that's going to be
It's
again on
bad.
the actual paper statement,
Mm-hmm.
not on the digital app. On the digital app, they're not required to actually show you the
Right.
interest rate on the digital app, but on paper, by law, they're required to. You ever think about how like right now everybody wants to go paperless?
Correct.
You ever think that like maybe it's just because they want to save trees?
Mm.
There's more than that.
It's clearly
Mhm.
like to hide something from you that by law, if you had paper, you would have
Mm-hmm.
be required to show you, right? So now, for most of those Amex credit cards, the interest rate is somewhere close to 27.99% for
Mm-hmm.
most average users, right? So if I could take you out of bucket number five, where you have that 27.99% interest rate with a bunch of other credit cards and maybe some other loans in bucket four, and I could take that 27 and those 18s and I could put you into 6 or 7%. Would that be of value to you?
Absolutely.
Okay. Question that you need to think about is which bucket is giving you the most financial problem whenever we're talking about second mortgages. We're not talking about the interest rate that you got that was below 3%. We're talking about all the other toxic debt that your money is going to related to your mortgage. It's not going to your home, it's going outside of your home. You're making the creditors and the banks rich. And I want to just inform everybody and just let you know that two of the companies that I'm strategically partnered with, it's Rocket Mortgage, which I use for primary loans, and I work also with Spring EQ for equity-based loans. And with equity-based loans, if you've got a home already and you're looking for some cash flow, for some of our clients, we're able to free up, like I showed in that example, accelerate the loan to the payments of the mortgage paid off 16 years faster for a 30-year. The money that we're able to save them, we're able to also take what we saved them, we put some of that into a retirement account. We fully funded that. They're on their way to having enough in retirement. Once their mortgage was paid off at age 50, we started taking the mortgage payment, we put that towards their retirement investments, right? By the time they were 65, which most people think is the age of retirement, because they're not working with us, they have $2.7 million ready to go sitting on it as a nest egg, right? So um, whether you're a realtor, a homeowner, or someone who's looking to prepare and buy, I want you to understand that, like, I'm not here just to write you a transaction. I'm here to also stand with you every step of the way. Even after we get you home, your first home qualified and you're in it for several years, I'm able to come back to you, and because I'm always watching the rates and say, hey, the rates are better right now. Do you have any additional debt that maybe we could eliminate, free up some cash flow, and put it back into your home? Does that sound good to anybody? All right.
Mm-hmm.
With that said, here's my information. For those of you who have questions, I want you to definitely reach out to me at the email address that's on the screen, which is el.princej@primerica.com. All right. Send me all your home buying questions. I'm happy to assist you. I've got a team of specialists. Okay, that's the best way to put it. We don't just help you qualify for a loan, we also get you verified approval letters, which is a good as cash offer. All right. So for buyers that are shopping right now, hey, we also do wholesale pricing lower than what you see on the retail side with Rocket Mortgage. All right. We also do wholesale pricing with Spring EQ. So any way you go, we're always going to have very competitive rates in your interest. Okay. We're not interested in giving you high rates. We're more interested in giving you affordable payments that you can make so that way we can free up the rest of your cash. All right. We want you to pay yourself first. And I know that we have some questions. So at this point, I'm going to go ahead and stop the recording and open up the floor for questions and see what solutions we can provide.